Hello and welcome to Collective Shift channel. My name is Matt Willemsen, Head of Research and Content here at Collective Shift. Thank you for tuning in to what is the very first episode of this channel and also the very first episode of this weekly series in which I will be covering the latest developments and news from the macro space and as well as the crypto industry. It can be very hard these days to stay on top of everything that's going on, so I will be doing my best to condense all of the week's most important news and to put into context for you and share my opinion to help you make sense of everything that's happening. Thank you to all the Collective Shift members over the past 4 to 6 weeks that have helped provide feedback and have really resulted in this weekly segment really improving. So I definitely encourage you to continue doing so, and your feedback is always very much appreciated. So for those of you who are new to this series, we start with I start with the Australian economy first, global macro after that, and then the crypto industry. And I always finish off with my some market commentary on the cryptocurrency, I guess, asset class, and just some commentary on the state of the markets and what I'm looking at and what I'm considering the most important news or updates to be keeping an eye on in the short term. So we'll get into it, starting with the Australian economy. And yesterday, I believe Australian time, the Reserve Bank, Australia's central bank, left their interest rates on hold at 0.1%. They also um, maintained their, I guess, timeline for their bond buying program. So there will be the RBA will reduce their bond purchases to 4 billion a week, but extend purchases until at least mid-February in 2022, which will reflect what they said is a delay in economic recovery. So that was the update there from the RBA. As far as consumer confidence is going, it is back to 100.0, which is exactly neutral, being an index. So really seeing that falling off in recent weeks as the lockdown has really extended and gotten worse in Victoria and New South Wales in particular in the past month or so. And as for consumer inflation expectations, or what regular Australians are expecting of inflation in the coming months or years, that has risen to a 33-month high, according to some data collected by ANZ and Roy Morgan. So, yeah, very just symbolic and reflective of the times at the moment where things are getting more expensive for a number of reasons, like from the demand side as well as the supply side, which I'll get into soon. So just want to put that on your radar there as well, because I think for those members who will watch the previous episodes, we have been covering rising prices in South America and Europe as well, and central banks lifting their interest rates in response to that. In the US last week, probably the biggest news of the week came late on Friday or Saturday Australian time, and that was a very less than expected jobs number. So the US as an economy added 235,000 jobs in August, which for those of you watching the video, not available on the podcast obviously, but on YouTube, you can see this chart of a really, I suppose, a real slowdown in the growth of the total number of employees in the US. I believe the consensus forecast was 725,000 jobs to be added, and so for that figure to come out at 235,000 is a huge, I guess, underwhelming or or a huge miss, I suppose, for lack of a better word. It kind of recovers the real issues the US economy has been having in recent months with respect to getting back up and firing, with these issues with related to the rise in COVID cases that we've seen in the past few weeks. And just back to rising prices, I really wanted to bring this to your attention. Retailers are warning of, I suppose, yeah, all retailers are warning, and there's been reports of just r rising supply chain just issues, just a lot of issues to do with getting things shipped over to your country in a timely manner. It's taking far longer than usual due to just all of the pandemic. And that is resulting then in reduced supply and therefore increased prices for consumers. So that kind of goes back to what I was touching on earlier, which inflation, you've got to think of it in terms of demand and supply. So there's, you know, demand-driven inflation or demand-side inflation where you could have an economy where wages, for example, are rising, really strongly, and that can then drive up inflation because everyone's got more money to spend, and they're really just happy to use their discretionary income on goods and services. And then you've also got supply side inflation, or I think it's called cost push inflation, if I'm remembering correctly. Um, that is basically situations like this where things just become more expensive for businesses and manufacturers and service providers. So they then pass on those increased costs. They reflect that in by rising their prices. So this is what we're starting to see, and we already have, to be honest, in the past few months. But I would expect this to continue heading into Christmas when demand, and in November with like Black Friday, things like that, and the Thanksgiving holiday. I would expect these sorts of issues to just really exacerbate and for prices to really continue to be pushed higher. So I think there was reports from IKEA in this case, but that's just one example. I think IKEA is really struggling with their supply chain at the moment. And as I touched on, yeah, again for members a few weeks ago was in Malaysia, where it was a great example of just how much an impact COVID can have on a supply chain, where Malaysia then had to all of their chip manufacturers, which are used heavily by the car industry, they had to basically be put on hold, and now you've got chip shortages, forcing General Motors to essentially just shut down operations of their North American plants. Okay, moving on to the crypto space, and the biggest news of the last 7 days or so was not necessarily this headline. It was El Salvador, I guess, recognizing Bitcoin as legal tender, which I guess had been announced 2 months ago or so, but had always had I guess, a lag time before it became effective, and it did on September 7. So that was a very historic day for Bitcoin. El Salvador being the very first country in the world to recognize Bitcoin as legal tender. In this case, it's alongside their local currency as well. And just before I suppose, announcement, the Salvadoran president, uh, he announced that El Salvador purchased 200 Bitcoin, and then a few hours later, another 200. And I think even this morning I saw they added another 150 BTC to their holdings. So very significant there. Again, another first in this case of a country purchasing Bitcoin to essentially hold. And just move on to very, very fresh news just in the past few hours, but this has been some of the biggest industry-wide news that I've seen in a while, and it will definitely be one of the biggest news stories of this year, possibly. It'll be up there. Was the SEC, or the Securities Exchanges Commission. They told Coinbase that they want to sue them over an upcoming and not yet launched product called Coinbase Lend. So SEC is basically responsible for, I guess, just protecting investors and to make sure um, that securities laws are adhered to. So they are just one of many regulators in the US, but a very powerful agency and I guess financial watchdog. And yeah, this news has really already started to impact the price of cryptocurrencies just in the past hour or 2 hours or so. Um, so after Coinbase saying here, after months of effort to engage productively, the SEC gave us what's called a Wells notice about our planned Coinbase Lend program. This notice is the official way a regulator tells a company that it intends to sue the company in court. And then you've got Coinbase here saying, as surprised as we were at the SEC's threat to sue without ever telling us why, we want to be transparent with you about the course of events leading up to it. So I'll leave these in the show notes below, the blog posts that Coinbase have just published in the past couple of hours, and their CEO Brian Armstrong also published a thread on Twitter giving his side of the story. And I think I did see that the SEC, out of all of the agencies in the US, they have been the only one who has refused to meet with Coinbase, and that refusal actually came after Coinbase was even publicly listed. So as shocking as that news is, it's even more shocking that that happened after Coinbase publicly listed. So this will be a huge story over the coming days and possibly even weeks. But I wanted to just put it on your radar here. I suppose, why is it important for you to know about? It is very fresh news, but the magnitude of it is just, it's so big because it's Coinbase. Anything to do with Coinbase and regulators will just draw like major headlines. It's the first publicly listed company in the US that's a crypto company. So anything to do with regulatory scrutiny will really impact the markets and will drive the narrative of the headlines. We have been seeing in recent weeks, just quickly, that the SEC and their chairman, Gary Gensler, has been very, I guess, posturing and commenting a lot on the crypto industry about their need, the SEC's need to have more, I guess, authority to regulate and to regulate the crypto industry and operators of decentralized protocols, for example. And yeah, so his commentary has really been ramping up in the past fortnight or so after, I guess, silence from, at least from his standpoint, over his first few 3 or 5 months of his tenure. He has really had no comments on crypto, so that's really just ramped up quickly in the past few weeks. Similarly, we saw Uniswap Labs, which is the entity behind the Uniswap front end. They are the original builders of the Uniswap protocol, the actual smart contracts that live on Ethereum. So they were the ones that built that and deployed it to the Ethereum blockchain, where it essentially you can think of as where it lives. But they have also been approached by the SEC for requests of information, essentially. We don't have too many details on what that information is, but it was at least said that it was the investigation is focused on how the protocol is used and marketed by Uniswap Labs. So there have been reports also from other, I guess, industry figureheads and things like that that they have confirmed that DeFi protocols, or at least the teams behind these protocols, have also been approached by the SEC almost on a fact-finding mission. So again, just more evidence of the SEC just trying to get more involved in, I guess, learning about how the crypto space works, and essentially that's all we know at this stage. So I would expect a lot more to happen, a lot more to come in the coming weeks and months. Sticking on that regulatory theme, the Australian in Parliament today, the Senate committee, they had, I think, their third of three, so their final hearings to do with the cryptocurrency industry. Um, that is now, yeah, the final one, and I think late in September, the Senate will be submitting their recommendations on ways to regulate the cryptocurrency industry. So I think there's coverage here from CoinDesk, which I will drop in the show notes, but promising to see um, these discussions had over three separate sessions, and I'm really looking forward to reading those recommendations out of the Senate. Hopefully, here in Australia, the crypto industry can really thrive based on these recommendations, but all still to be seen at this stage. Over to adoption news of the crypto space, and Twitter has allowed, or it looks as though it will be allowing its users to add Bitcoin and Ethereum addresses to their profiles. So there were some leaked screenshots, and I think one of their product leads basically more or less confirmed that it was true. So for those of you unaware, Twitter is by far the most heavily used social media platform in the cryptocurrency industry. So this would be enormous, very big news for the whole industry, and it was particularly noteworthy that Ethereum was included in these plans, at least, or ostensibly. Like it seemed as though they are going to be included in these plans to integrate, I guess, cryptocurrencies essentially. It was surprising because their founder or co-founder Jack Dorsey is known for being a real, Bitcoin maximalist, and um, which is it's great that he's open to crypto, but in general, but he has historically been very just single-minded on Bitcoin. So to see them integrate Ethereum also into this will be huge news. From more adoption standpoint, Reese Witherspoon tweeted she just brought her first ETH. So I think in late 2017, I remember a bunch of celebrities coming out and really just advocating for crypto, more so to do with specific ICOs, which was a definite no go and a sign of, I guess, the top in the crypto markets. Ironically, this was essentially the top, or the local top, as we've seen the crash, or a market crash in the past 24 hours or so. But just more, I guess, more data points and more information for you to be aware of, that I suppose how much crypto is permeating the mainstream. Similarly, Stephen Curry, who in previous market updates for members, I think I talked about him purchasing a Bored Ape Yacht Club avatar, as well as another some sort of Kong's NFT. And today he purchased a Pudgy Penguins NFT as well. So definitely building up his NFT bags there. And more importantly, at least as far as adoption goes, he made this tweet yesterday that he was getting into the crypto game, and if we had any advice, so just engaging the crypto space. And then overnight, or at least here in Australia, he was announced as an FTX Global Ambassador. So for those of you unaware, FTX is fast becoming one of the biggest exchanges in the industry, and they have Tom Brady as well recently signed up as a global ambassador for FTX. So to see Steph Curry also sign up is just huge news, and FTX just continuing to make those huge mainstream announcements of to really try and, I guess, make themselves a household name outside of just the crypto circles. Keeping up with just this mainstream adoption, moving on a bit to NFTs here. Sotheby's, so a really big auction house, a traditional, been around for several decades. They are now auctioning off Bored Ape Yacht Club's NFTs. The current bid is 1 day to go at the moment, and $19 million US is the current bid. I believe Christie's, another huge auction house, they are also auctioning off Curio cards, which is another NFT, one of the earliest, I think, in kind of the 2017 pool of NFTs. So just more examples and more information that I want you to be aware of, to just get a sense for how huge crypto is becoming, and NFTs in particular. Speaking of FTX and NFTs, they also released an NFT marketplace, which essentially also has this feature where you can mint your own NFT through the exchange. So more validation there for the NFT space. This will be built on Ethereum and Solana. And I think this FTX. Okay, I thought it was just the FTX, the non-FTX US exchange, but it looks like FTX US is also included in that. So that's very promising. We saw Binance, I think a couple months ago, announce an NFT platform. So if you did have any hesitancies over NFTs maybe fizzling out and fading away in a year's time, I think just examples of this sort of adoption and news is just really just like quashes that. I think NFTs, if you weren't kind of open to the use case and value proposition of NFTs already, I think it's definitely time to take them seriously. And we're doing our best to cover them every day for our members, and we'll continue to do our best to educate on the value props of NFTs, which I still maintain are very severely misunderstood. I guess it's our job as content creators and researchers to really help our members and the public know and understand how powerful NFTs can be. Speaking of which, I wanted to cover just probably one of the biggest themes of the past 7 days has been this emergence of, I suppose, metadata based or text based NFTs. It's just completely flipped the whole NFT ecosystem on its head, or at least or what was the most commonly, I guess, associated understanding of what an NFT was has always been an artist or a photographer, um, releasing their art as an NFT, and it's in its final form at that stage, and then the consumers or their fans essentially buy the NFT. What you've seen happen in the past week is a new concept called Loot, LOOT, which I covered in last week's update. But I'm sure many of you who keep up to date with the crypto space would have really been aware of just seeing loot everywhere over the past week, and that's because it's such a paradigm shift in just the way to conceptualize what an NFT actually is. So in the case of loot and all of I'm not going to say copycats because they're not really like exactly the same as loot, but they're using the same mechanisms of just having some metadata, associating that with an NFT, and then really just releasing it, and then relying on a community, I guess, being interested in that metadata and the use case of metadata, and then forming a community around it and building a product. So it's just super exciting to see, and the innovation already in this space is huge. I suppose I want to clarify what I mean by metadata for those of you unaware. I don't actually think I can have a technical definition of what metadata is, but it's essentially, in the case of Loot, it was what they released as an NFT was essentially just a list of text that was a bunch of items to do with role-playing games or medieval like role-playing games. So the NFT was literally just words of items that were to do with what would be a theoretical role-playing game universe. So similarly, you've seen ideas such as Mira's one here with their right race right race experiment. Probably isn't the best example. There was also Rarity by Andre, the founder of Yearn. He released one which I will share the notes of that in the blog posts. The one I really wanted to talk about was the N project. So you had this concept of loot, which in many ways was very restricting creatively because it was only those items were really only associated with a role-playing game and some sort of medieval universe. So what the N project is doing is essentially just stripping that back even more, and it's just providing an NFT that is just a unique string of numbers. So literally just a sequence of numbers, I think between 0 and 14. Um, and every one of those NFTs is unique. And now what you're seeing, so this is what I would classify as a metadata NFT. So what you're seeing now is a huge like Cambrian explosion of innovation that's like circulating and surrounding this N project ecosystem where builders are coming in and creating art based off of these sequences or these unique combination of numbers. So I saw some really cool art earlier today, which was, I guess, algorithmically like automatically generated based off of the input of these numbers, which is just like mind blowing. And it's hard to get your head around at first, but once you start to understand the implications and the applicability of what you can do with these metadata NFTs, it is really mind blowing. And the M project was one I really wanted to cover in particular because it really, at least for me and other people I've spoken to, it really helped them appreciate what these metadata NFTs can do. Um, so I did put that in our daily research call that we do for pro members, and I also put it in our private Facebook group. I think I covered it here a bit. I'll just go in and show you some of these automatically generated ones. It'll add some really good color, I think, to what's possible with these. But essentially, that was my explanation of why it is the value prop of it. And at that time, I think the ends price floor was 1.4 ETH. Um, what is it now? 1.93, 1.85. So you're essentially paying 1.85 for these string of numbers essentially. But it's not just that. The value really comes from, I guess, the exclusivity and the access you get. So once you hold that NFT, you will then get access to all of these projects that are building based off of this core set of numbers, and they will give all token holders essentially access to these new pieces of artwork, for example. And so the real value not only comes on the appreciation of this token, it also comes with the ability to, get these for free. And then these then drive value and create value because they then go on secondary marketplaces such as OpenSea. So this one is called Art for N, which is algorithmically generated art, which is created based off of that core um, collection of numbers. So like really, it's just like next level stuff that has just really flipped the whole NFT space on its head, and it's one of the spaces I'm looking like really closely at over the coming days, and I have been every day for the past 5 days or so. So we'll continue to keep members updated and to also update you in these weekly calls. With respect to price action over the past week, saw some really promising developments as far as Bitcoin goes, of it breaking above 50,000 um, and holding above it, at least for a couple of days. And it really got up to almost 53,000 for a while, which it hadn't done since uh, hadn't done since could get that out since about the start of May. So that was very huge development. But as we've seen in so many times this year, like two or three times, you get this almost build up of confidence in the market. And what we saw overnight was, I suppose, just it got so built up and pent up with leverage and borrowed funds um, that eventually you start to see a gradual sell off. Um, and once that gradual sell off continued, you really start to see panic come into the market, and then the leverage longs. So people who borrowed essentially borrowed money to put on long positions, so trading on leverage basically. When the market starts to, or the price starts to decrease, they have to cover their positions, which involves buying back at lower prices to close their positions. And so you eventually get this short squeeze, and all of the very frothy and over leveraged positions all then close, and you get back this cascading effect, which is what we saw overnight. So we saw this, I think, earlier in the year when Bitcoin got over 65,000. And I think we saw it back in May when I think Bitcoin was really creeping above 50,000, and then really had another crash or relative crash back down. So it's all part of the cycles really. You get this euphoria and optimism, and people start to get confident again, and then the people who enter positions too late, they're the ones that are the first people to go. um, and that then triggers a cascading domino effect, if you like. So that happened, and Bitcoin did for a brief moment crash all the way to from 53,000 to 43,000 overnight, and rebounded to about 47,000. And then that news about Coinbase dropped a couple hours ago, which really hurt any type of recovery, and um, I think will keep prices suppressed at least for a while. I don't think the Coinbase news is as bad as what I think the initial perception of it will be in the headlines, because it really is just to do with one sort of product that Coinbase was going to launch. But when you get a huge crash, and then on top of that, like bad or what is perceived as bad news, it really just makes it a bit harder for prices to rebound quickly and for that momentum to continue higher. Um, so looking at the RSI here on the 4 hour, it's down to 24. So anything under 30 is generally considered oversold territory, and that's at about 24 at the moment, which it hasn't been for, I'm zooming back here, for a very, very long time. I actually can't go back, at least on the 4 hour time frame. Um, Technically, it wasn't that low in June. So we haven't seen this oversold condition since the start of May, which was that enormous crash that we saw. So normally, I would say that's the worst of it's over, but I'm just interested to see, with the US waking up soon, at least in the very short term, how that news will be perceived. On the daily time frame, I think Bitcoin has lost. Yeah, it has. It's lost the 200-day moving average, which in past weekly market updates I've been, I guess, just describing how much of a war this is at the moment between bears and bulls of really trying to win over the Bitcoin price to be above the 200-day moving average in the case of, I guess, bullish investors. And for the bearish traders and investors, they really would prefer Bitcoin to be under the 200-day moving average because it is such a psychologically significant trend line. And Bitcoin had been above that, and it held above that really promisingly for a few weeks or so. But with this most recent crash, and now this Coinbase news, it has fallen at least intraday below that. So yeah, if it does close below that 200-day moving average, that'll just be another like real issue, at least as far as bullish investors, people wanting Bitcoin to go higher. That's going to be another issue because it's going to then create that challenge again of Bitcoin closing above the 200-day moving average, and to do that multiple times to build up that pattern and confidence again. In terms of ETH, it was unsurprisingly much the same story, where it's nowhere near the 200-day moving average, like relative to Bitcoin, which has been the story for the past couple of months or so. But yeah, it fell from about 4,000 to early 3,000s for a very brief moment, and now so it's fallen by about 16 to 18% over the past, I don't know, 24 hours or so. So a huge correction there. But in the case of ETH, it's still had such an incredible run um, over the past couple of months or so. Uh, but yeah, it's really going to be follow the leader again with respect to ETH and all of the other altcoins, um, and seeing how that can it can rebound. And I will drop this Twitter thread in the show notes below. It was a really great summary of from a description of from a day trader who does this for a living, a quant trader rather, Sam, who is the CEO of Alameda Research, which is the research firm associated with FTX, which is run. Also, the CEO of that is another Sam. This Twitter thread was a really great explanation of, at least in his opinion, what happened and what he missed and what he thought, what he was a bit surprised by. So for those of you who care about the price, I guess on a more day-to-day level, I would encourage you to read this. But for those long-term investors out there, such as myself, like these types of incidents, these types of occurrences and events, like in terms of the crash from last night, don't really worry me too much. Like long term, I'm still incredibly bullish and I've never been more confident on, I guess, the state of the crypto industry, the amount of talent coming into the industry as well as capital is as healthy as it's ever been, which is, yeah, in my opinion, the main factor that will drive success in the long term, with respect to prices. So um, we'll wrap things up just before we do. What am I looking at and what am I really paying attention to over the next week? It will be, um, aside from price, it will be continued uptake. I'm really just continuing to monitor Ethereum's fees, to be honest. The longer that their fees stay unhealthily high, um, the the more opportunity that gives for other layer one chains such as Solana and Avalanche and Cardano and Phantom, the more chances it gives them to have some adoption of not just average users, retail users, but also then developers who maybe are building solutions on Ethereum at the moment, or at least wanting to, but are really deterred by um, the fact that their solution will basically be just not able to be used by a huge percentage of the population. Um, Also, I am looking at continued innovation on the layer two ecosystem of Ethereum, which has started to get some traction. I guess Optimism is the big one I'm looking at next. I think they still have their whitelisting going on, so it's not fully launched, but that is once that fully launches with Arbitrum, which did last week. Once Arbitrum and Optimism are fully deployed, that's when I'll get particularly excited. And if Ethereum fees don't come down after those two have been live for a fortnight or so, I'll start to get a bit concerned in terms of the, I guess the attitude, rather, if you will, of the average user. I think they've been very patient with Ethereum because it is just by far, at least in my opinion, the most exciting blockchain, I guess, community and the vibrant ecosystem of all these different solutions. It's by far like the leader, in my opinion. But for the average user who just can't really just economically really use Ethereum at the moment, if these layer two solutions don't really drive down fees, um, it's really going to be an issue, in my opinion. So that's something that is occupying the the main thing that's occupying my mind at the moment when I'm just looking at the state of the markets and state of the industry. And just of course I'll be really keeping up to date with these metadata NFTs because again, for all the reasons I've already covered, that's really the main kind of source of innovation in the NFT space at the moment. So definitely looking forward and exciting to keep up to date with that. But I'll leave it there for this week. Thanks for tuning in to what was the very first episode of of this series as well as the channel overall. If you could like and subscribe, that would be great. I never thought I'd say that, but here we are. And yeah, that'd be much appreciated. And any feedback, of course, is always welcome. So we'll leave it there, and I'll see you again next week.